All right, good morning, everyone. Let's get going here. All right, U.S. stocks last night, bit of a choppy session, kind of back and forth, but in a very tight range. Not a whole lot of leadership on the day. I think markets obviously struggling to get to 2,000, but struggling to fall more than a couple points on the day as well. And you can see here that the earnings numbers have been good, but yesterday we had a couple softer numbers in Amazon, which came out after hours. It was a big miss, down about 11% after hours. General Motors also, but we did have Facebook and Ford that were trading well on numbers from the previous day. We also had some disappointing numbers out of new home sales on the day, but that was, I think, really offset by really great numbers out of from jobless claims. I think our 4-week moving average is probably now dropped below 300,000, or it must be close now after the 284,000 print yesterday, which is definitely in line with real bull market type status within the economy. So I think this is, I think it's incredibly significant. With the fact that that's able to continue going on. All right. Let's look here in Asia overnight. You can see most of the markets were up outside of Australia. Nikkei obviously being the leader there. We had the June CPI numbers that came out from Japan, which rose 3.3% year on year, matching estimates. We also had the IMF, which came out overnight in the U.S. session, in fact, that lowered its global growth forecast to 3.4 from, I do believe that was supposed to be 3.6. Sorry about that. But lowered the growth forecast, basically saying that some of the developed markets were struggling a little bit. And then Australia maybe just dragged down a little bit by some of the miners, maybe after a little bit of buyer's exhaustion, some of the gold miners struggling after the precious metal prices really got hit a little bit. All right, if you look at this is an interesting little chart here, and I actually remember this from the some of the previous booms, but you can see here that Sotheby's, the auction house there, really is a great indicator for kind of calling market tops and bottoms. And you can see there that we're getting to elevated levels. We've taken out new highs in terms of the numbers from Sotheby's, and probably still got a ways to go. But bottom line is, you can kind of see how the boom bust cycle really happens there in correlation with the equity market. So it's a really good little leading indicator to kind of have a look at. It's an interesting chart. All right, we had an Anglo-American which is out this morning with numbers. We have headline earnings per share coming in better than expected at dollar versus Bloomberg consensus at 90 US cents. Revenue looks like it was a bit of a miss, though, and divvy per share dead in line. So there's a conference call going on right now, if I'm not mistaken, and we'll wait to see what comes along after that. We also had Lawman with a production update that said third quarter production obviously severely impacted by strikes, currently at 30% of normal production, which is quite shocking, and I think that's what a lot of people don't realize, is how long it's going to take them to get these mines back up and running. With 348,400 saleable ounces lost, sales fell 68%. CapEx forecast being cut to less than half of. We've got sales forecast for the year going to be 420,000 saleable ounces. And today in the States, we've got AbbVie that comes out before the bell. AbbVie is the one that just bought Shire Pharmaceuticals to pull a little tax manipulation scheme and move the tax to a base to a lower level over there in Ireland. And then we've got Investex, which goes ex-div today for 196. Ex-div on Monday for 196. All right, let's look at market data. We like we said, we had the CPI numbers out of Japan, which came broadly in line. We have We have consumer confidence, which comes out of Germany, or came out a little while ago, slightly better than expected. We've got Spanish PPI. We've got all the IFO numbers out of Germany at 10 o'clock. We've got money supply numbers out of the Eurozone later, and we've got GDP out of the UK, and then we finish in the States with durable goods. All right, let's get into the maps. Okay, the first thing we're going to start here with is a couple charts on London, but these are dual listed, so somewhat significant nonetheless. We're looking at Anglos this morning, which obviously had earnings, but what's interesting here is the setup and the potential head and shoulder setup that we've got out of Anglos. And you can see here we've for the short term we failed at 16. Definitely looking a bit head and shoulderish, to say the least. I think we're going to have to watch 16 very closely over the next couple sessions to see if 16 can hold. And you can see here the neckline's down here around 14, so quite a ways down. I would say that we're probably safe so long as Anglos maybe is kind of holding the trend support, which really works up to about 1550. But that's very subjective. Bottom line is we're going to have to see how it hangs around the 16 level. If it's able to reverse up and push through, then that would obviously totally negate this pattern. But if we start to sell off it a little bit, this could be it could come under a little bit of pressure. It's totally contradictory to what I'm getting ready to show you in BHP Billiton. I just wanted to show you the kind of the differences there. You can see that Billy's has obviously been in an incredibly consistent range there. Look at that. I mean, you don't see that all that often. Topping out literally at the exact same sort of levels right here at 20 pounds, which we popped up through a few weeks ago, maybe 2 weeks ago, and we've pulled back right into 20, couldn't drop 20 again, and we've pushed out to the upside. We actually have quite a significant target here to the upside in Billitons. I would say as much as $2 to 2.5 pounds, and it's going to be one to definitely watch over the next little while. If we do get a pullback over the next couple weeks down to around the 20-pound level, maybe worth of a little bit of a nibble here locally, especially because the rand's strengthened up a little bit. Might start to get a little bit of weakness in the rand again soon as well. All right, look at IPL, Imperial. And Imperial, you can see here, we've really been making a bit of a broadening formation, or let's draw this from the wick up here, or a flag, whatever you want to go with. That wasn't very good. Okay, there we go. What you can see here, we're right down there testing resistance at the moment. And I think on the upside of the flag, we've kind of been hanging around this 200-day moving average the whole time. I would really look for a push up through 200 to be real confirmation. I think if we can get through 200, then it's definitely confirmation that we've broke up out here from the flag pattern, but chart's starting to look pretty bullish there. If we look at pick and pay, you can see that this has just been one of the most boring stocks over the past, I don't even know how long. Looks like about 3 months here. Same sort of thing, maybe a bit of a broadening formation. I don't think you can call this a flag because it's literally just moving out dead right pretty much. But bottom line is a move above 60 here will definitely be a breakout and give us a target, probably a short-term target of as much as 63 or 64 rand. So keep an eye out for that one. If we pop up above 60 and pick and pay, we're probably going to start to squeeze some more of the shorts there with a big short position on the books at the moment. All right. This is SA Breweries London. Let's look at breweries. Locally, you can see breweries came down yesterday, sold off hard off of the production update yesterday. We had guys like Merrill Lynch calling the stock up as much as 2% in the morning yesterday. They did open up quite a bit, but we had a hard reversal, as you can see. We really just reversed down the entire day after opening up reasonably. And we closed right here on support at about 590. right around 590 on breweries. We did bounce into the close in London, closing as high as about 596 and a half over there. So if we, I think we're going to struggle to break down here this morning, especially initially. But if we do drop 590, there definitely could be a little bit of downside here in breweries. All right, let's look at Nedbank. Nedbank been in obviously a consolidation phase for the better part of 2 or 3 months. It's not actually where I wanted to draw the chart, draw the line. I want to draw the line up here because we did pop up here on this and wicked it up here a couple times. We finally broke through that on yesterday's close, above 240. I think this is definitely looking like a breakout here, and I think we've got a probably significantly higher target, as much as about 255 on the cards in Nedbank. So just keep your eye out for that. All these banks have really kind of been impossible to get down even a little bit recently. All right, and the last one that I'm going to show here, we're looking at one of the U.S. stocks. It's really where the big game's been, trading offshore, trading some of these, making some of these swing trades and setups there. You can see a beautiful head and shoulder setup off of the back of earnings. We dropped through the neckline here 2 sessions ago, and yesterday we really just got confirmation of it. So the neckline here, which you can see, is right at about 432, and I think that we've obviously dropped that convincingly. We've got a downside target here of about $42, which is convincing. Should take us down closer to this 380 odd range, which would be close to the 200-day moving average if it does pull down there. So interesting setup there in Netflix. If you guys are punting overseas, have a look at that one. That's it for today, guys. Happy trading.